Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng is the only sore spot among the otherwise largely positive Asian indices.
So this 57,500 odd mark, look at the options data, look at the recent low as well. That becomes the first level of support.
It's open today up until November 4th. The price band 382 to 402. Flattest start. This one on the mild red side of things.
In some of the mid and small cap related, particularly in the SME area, we do see a bit of valuation excesses coming through, but they usually tend to get washed out over a period of 3 to 6 months.
The current year also we have given a guidance of 11%, and we are able to show almost 13.5% in the year-on-year by the end of the September.
We as platforms, will have to create more opportunities for consumers to participate in what we call the low, value meal segments.
So GNPA Q1 was also 5%. And Q2 is also 5%.
So we expect our operating margin for the full year also to be better than last year.
The Nifty Bank is moving to a very crucial juncture, which is the 57,500 odd mark.
SEBI chairman at the BS summit has said that they need to find the right approach towards the derivatives market.
The Nifty is sitting with cuts of around 100 points as we speak.
Well, that was the day so far. Hello and welcome to Friday's edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbi and Nigel. Still subdued, right? The Nifty is down below 25,800. Mid-caps are now back in the green.
Well, that's right. I think the Nifty Bank is actually holding on to this crucial level. So that's one positive, because that 57,500 is the level that we visited last week. And we've defended that mark. And the other positive is at least the mid-cap index is in the green. But it appears that 26,000 odd mark, it's a bit of a barrier. We went very close to that mark earlier today, but we've given it away. But clearly, I think one of the sectors that have done very well is the PSU banking space. Up and about, continues to power ahead. And the last few weeks, I think that's the outperforming sector that we're looking at, up close to around 2%. Surbi?
Yeah, absolutely. So we'll see. Otherwise, it's been a week of consolidation. It's been a week that at the index level we haven't gone anywhere. Nifty's barely changed, so far. It's all about just following individual earnings, and you're seeing some of those reactions play out. Shriram Finance's stock is reacting pretty well. That profit figure is above our estimates. Gaurav was saying that the expectation on net interest margin is that the compression should be less than 10 basis points, not more than 10 basis points. Most of the lenders are actually surprised on the upside on NIM compression. Let's see if Shriram can continue that trend or not. Right now, the stock's pretty excited. Net interest income rising about 10% as well. Gale's numbers came a while back. They look pretty good. There's margin expansion there as well. That stock's holding up about 1% or so. So it's more about individual earnings. And speaking of earnings, today has also been a day of very sharp reactions. Wherever there's earnings disappointment, case in point being Bandhan Bank, stock has been slammed, 8% down and counting. Motilal Oswal, obviously other regulatory concerns now with this whole MF brokerage issue. Stock's down about 5%. And by the way, Swiggy, something we've been discussing, their 10,000 crore rupee fundraising, that stock's turned negative now in the second half. Started the day with a gain of 3%. Now it's down about 2%, so a little subdued. So, guys, I guess it's all about chasing individual stock level news flow and earnings. The index, I think market's saying we'll have to wait. Let's just focus on earnings for now.
Two more stocks. One is Strides Pharma, and we should get that up. Reacting to numbers, the top line growth is 4.5%, but margins have come in at 19 versus 15.8%. Profits have jumped 82%, and there you have that reaction on the screen. 10% up on that. And the other one is Intellect Design Arena. Came out with numbers about an hour back. This is a products company, largely catering to the banking sector. So you look at the numbers on a year-on-year basis and not on a quarter-on-quarter basis like we do for IT services companies. But they've done well. Revenue growth 35%, profit jump 94%, and that's been one strong stock. But let's tell you about the action-packed final 1 hour, which is coming up on Closing Bell. The Nifty's dropped below 25,800 level. It's the lowest point of the day. Autos, PSU banks are steady, while metals are seeing some selling pressure. Bandhan Bank has delivered a weak showing in Q2. A detailed fine print coming out from our excerpts from our management conversation. Emphasis is falling in trade despite a strong quarter. What is ailing the stock right now? And then we'll also talk about a few mid-cap players reacting to earnings like Navin Fluorine, Intellect Design, Strides. We'll get the key highlights from the numbers on closing bell and the key earnings to watch out from today. Maruti, we just came out with the number, and Shriram Finance. We'll discuss these two too.
Okay, so how should you be positioning yourself in the last hour of trade? We've got Mitesh Thakkar joining in, so let's ask him as always. Mitesh, very quiet at the index level. Any trades for the last hour at all?
Not on the index, so good afternoon. I think, very clearly, as I said, if we keep failing to get past 26,150, 200, we will look back to 25,800, and we are there. We are just below that. And in a bad case scenario, even 25,600, 565 zone. So I think that is the level which I'm now looking at. Maybe another 150, 180 point downside could still happen. And this will still be a very normal pullback to the entire rally from 24,600 to about 26,100 plus levels. So looks like that, that pullback will play out first. But for the time being, the broader view hasn't turned negative. I think the weekly indicators are still positive. So I suspect around this 25,600, 550 zone, once we get there, I think that will be a very welcome buying opportunity. Having said that, the stocks which I have on my recommendations is a buy on Aurobindo Pharma with a stop at 1129 for targets of 1175, and a sell on Amber with a stop at 8150 for targets of 7850.
Okay. Thanks very much, Mitesh, for that. We'll come back to you for some more ideas in a bit. That's an interesting story flashing on the screen. It seems that hospitals have agreed to hold their rates for FY26. We'll just try and get some more details on that in a bit. Narayana Health is in focus separately. They've done an acquisition as well. So we'll discuss that in a while. But for the time being, let's put the spotlight on Memphis, another stock that's been knocked out quite a bit. Rima, was there something in the numbers? Is there something in the commentary? What could be the issue here?
Well, numbers are fine. The commentary is positive. So it's not to do with the numbers. There could be, two reasons. One, the stock has done, relatively better than its peers. So year to date, the stock is flattish, while the Nifty IT index is down 17-18%. So it's been a bit of a relative outperformer, and valuations too are, with the cooling off that we've seen today, it's in line with the 3-year average of about 25 times. But, so otherwise valuations were not particularly cheap. But, there's this one rumor which keeps doing the rounds, which is Blackstone, which is the promoter of the company, a PE entity. They have a 40% stake in Emphasis. So that news about whether they will sell, do a block deal in it, pare down partially at least their stake, does the round. And whenever the news comes, to the market, the street starts fearing it. So that's the reason why Emphasis, perhaps, what I've learned from people in the market, is under pressure. There's one example, of a company which, was PE owned, and then it became completely owned by retail retail shareholders, and it's done very well, is Coforge. So Coforge was also PE owned, but there the PE is completely exited, and under the leadership of Sudhir Singh, Coforge has done very well. But Emphasis numbers were great. The company in the conference call spoke about how revenue growth for the company this year will be twice that of the industry. They will maintain their margins. Their pipeline is at a record high. Deal wins in the first half of the year, more than the deal wins that they enjoyed in the whole of last year. But Gurmeet Chadha of Complete Circle is now joining in. Gurmeet, have you heard anything which explains the 4% drop on Emphasis?
Not really. I think the point you made, Rima, on the promoter supply coming could be some of the reason. Also some positioning, because mid-cap IT has been doing well. And in a market like this, 3, 4, 5% move can happen to the best of the names. So not much. The numbers are good. Even the commentary was good. But as I said, I think from a IT perspective, I think the broader up move will come when you have a bit of a trade deal with US. Today, Cognizant talked about secondary listing in India. That if at whatever point of time something happens, that could also be a bit of a positive trigger. So I think IT is a bit contrarian bet right now, but I think the risk reward increment is looking better.
The Cognizant management, when we asked them, said they're very preliminary discussion. It's a long-term project. It's very complex. And I asked them, even legally, is it allowed whether you can be listed in two places at the same time? He's like, we don't know. We haven't decided anything right now. But considering that Indian large cap peers trade at a 40% premium to what Cognizant is, I think that is the allure for a company like Cognizant to even explore getting listed in India. But let's move on to the other big story. Gurmeet, do stay on. Sources tell CNBC-TV18 that Tata Trust will be holding a board meeting on the 11th of November. Parikshit joins in to tell us what could be on the agenda, what we should watch out for. Parikshit.
Well, the November 11 board meeting will be the first meeting that the Tata Trust will be holding after the ouster of Mehli Mistry. Remember, his tenure ended on October 28 without his reappointment going through. Now, this will be the first time that all the trustees will come together in his absence. He will not be present in the boardroom. You will have Noel Tata, the chairman of Tata Trust, Venu Srinivasan, Vijay Singh, Pramit Javeri, Jahangir H.C. Jahangir and Darius Khambata, but no Mehli Mistry. The agenda for the meeting has not been circulated as yet, but we're told that in the run-up to this meeting, there has been no communication about the exit of Mehli Mistry, and some trustees believe that the matter or any agenda before the board on November 11 will be passed smoothly. Now, when it comes to the road ahead for Mehli Mistry himself, Mehli Mistry is currently on an overseas visit. He's not commented on CNBC-TV18's queries about the developments and his exit from the board. It remains to be seen whether he will accept his removal and his reappointment did not go through, or he challenges it. Some experts say he does have a legal ground in the fact that in October 2024, there was a resolution passed that all trustees have to be reappointed unanimously and for life. So it remains to be seen what Mehli Mistry does now. Tata Trust has not commented on the developments. When we speak to about legal experts about what may happen next, well, they are telling us that Tata Trust, the Secretariat, has to inform the Charity Commissioner, which is like the nodal body for trusts, in about 90 days. That's the upper limit. But very often, trusts go ahead and make such intimations about change in boards within 30 days in order to make sure that other compliance procedures go through. So a lot of developments taking place within Tata Trust. What happens in the November 11 board meeting will, of course, be important to show what happens next and whether the proceedings and relationships between the trustees will be smooth thereon or not.
Okay, all right, got that, Parikshit. Thank you very much for that. I think in a bit we'll get Yash on this story that you just saw play out with respect to hospitals and the rates they're charging and whether they'll be revising their rates or not. In the meantime, those are Vedanta numbers on the screen. Nigel, first glance, how's it looking?
For Vedanta, the most important number is the aluminium business. And out there, I think that's a beat, because the aluminium business had put together 3 or 4 brokerages that came in there and they had put out expectations. So the number was around 4,750 crore rupees in terms of the aluminium EBITDA. I can see that they've delivered a number of around 5,532. So clearly those numbers are better. The aluminium business has done well. The oil and gas business was expected to be a bit of a dampener, and it is. It's a small miss of close to around 80 to around 100 crores approximately on the oil and gas business. But the reason that the absolute number, that's a consolidated EBITDA number, is looking better because the aluminium business has delivered a 700 crore beat in comparison to our expectations, coming in at around 5,500 crores. Expectations were around 4,750 crores. And the zinc business, let's get that as well up. That's around 373 crores, but that's a very small proportion of the business. So Vedanta's numbers, consolidated basis, look good. Aluminium business leads the way. We already have Hindustan Zinc's numbers with us. So the India zinc silver business is already known. What you need to focus on is the consolidated numbers, which look good. And obviously, the trigger for the company going ahead is what's going to happen with the demerger and what are the timelines of that front. But numbers, no worries on that particular front. Let's go back to Gurmeet. Gurmeet, what's your view? I mean, you all have been playing a couple of these tactical companies. I think, we're playing some refiners, oil and gas, I think, out there. In metals, I think Mukund is something you like. Any view on Vedanta?
We had Chennai Petroleum, Nigeria as a tactical call, played out well. We have Mukund again as a special situation, more in terms of land monetization, debt restructuring, and companies now getting into machine tooling, especially with cranes, supply imports, and now with renewed emphasis on shipbuilding by the government, and valuation-wise gives a lot of comfort. Vedanta numbers on the face of it look good. I probably will have to do a bit of a deep dive. Also looks a bit of a beat, as you rightly said, in aluminium. I actually believe that we are in a commodity cycle now. These cycles are much longer. With the emphasis government will have on shipbuilding, I think that will have a huge impact on steel and in general. With capex picking up, L&T commentary yesterday on private capex was pretty encouraging. So you got to get into them a little early. And you have to be a little reverse when it comes to commodities. So tactically, you may look at both ferrous and non-ferrous things, but we have for now just Mukund in the portfolio on commodities.
Okay, all right, got it. Gurmeet, stay on. We have more questions for you, but let's just revisit that story that was just flashing on the screen a while back, which seems to suggest that hospitals may not look at revising their rates this year, and this follows a whole back and forth between hospitals and insurers because they're at odds with each other. Yash has the details on this one. What have you picked up, Yash?
Well, that's correct. So, of course, the important statement is that hospitals may hold any rate revision when it comes to 2026 as a year. What we've been given to understand is that there have been meetings between insurance companies and hospital heads under which it is likely to have been agreed that hospitals may hold rates for 2026. Now, importantly, what we've been given to understand, the meeting and a possible agreement happened because of the intervention from Department of Financial Services itself, which, sort of intervened and asked insurance companies and hospitals to sit together and sort of explored this idea of holding rates for 2026. Now, just the rough numbers that we have, annual medical inflation is about 14%, and as a response to that medical inflation of 14%, insurance companies take a premium hike of anywhere between 8 to 12% each year. What we've been given to understand is that this year and the coming year, 2026, insurance companies would already be under pressure because of the GST changes and the cost burden which it puts on them. And it would have been difficult for them to take this additional cost of not increasing insurance premiums to sort of give complete benefit of that GST cut of 18% to policyholder. And hence, Department of Financial Services is likely to have explored the idea of asking hospitals to sort of hold any sort of rate revision for 2026.
Okay, all right, got it. Yash, thanks very much for that. Gurmeet, just tossing this to you. We don't have too many further details of what this means and in terms of pricing, if there is a material change that will happen right now, but those are the early indications that Yash is picking up. Would this be an overhang on hospital stocks if they indeed don't hike rates at all for the next 1 year?
I don't think so. I think there could be some profit taking because just the run up Surbi hospital stocks have had. I was actually sitting with a hotelier and he told me that the EBITDA per bed, right, for hospitals is 3 times that of an hotel. So there's no incentive in running a hotel. I think that valuation gap is too high, and at some point of time, some moderation will happen. Obviously, it's factoring in all the good growth. Just look at where, Apollo or Max and others have done. Also, a lot of consolidation is happening. These guys have figured out an asset-light model in terms of buying local hospitals and not so names, and which is what hotels were doing, the managed key concept. So while the growth would be there, but I think price probably captures a large part of it.
Okay, all right. Thanks a lot, Gurmeet, for joining in and discussing those stocks for us. Wishing you a good Friday afternoon and evening ahead. Well, it's time now to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here's today's chart and what it means for your next market move. Union Bank is a stock on your screen showing a cup and handle pattern on the verge of a breakout. As you can see, a cup and a handle pattern forming steady uptrend, price on the verge of breakout above the handle resistance. A successful breakout may trigger a strong bullish continuation. And you'd like to access more expert-driven insights and actionable chart patterns like the one that's coming up for you on the screen, Simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 grand of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. Lots and lots of financial numbers have poured in. Let's pull up Shriram Finance and see how it's doing. It was up 3% last we checked, up about 2% as we see it right now. There's a bit of profit taking that's happened after the initial surge. Gaurav is with us. Gaurav, that PPOP number looked really good. Tell us more.
Well, as when we look at Shriram Finance, the numbers actually look good, and let me tell you why. When we look at net interest income, that increased almost by 10% on a year-on-year basis. PPOP, that increased almost by 11.5% on a year-on-year basis. Now, what actually came in as a surprise to investors is that when we look at credit cost, specifically if you look at the provisions, that increased just by 3.5% on a sequential basis, and as a result, when we look at credit cost, that remained flattish at around 1.92%. That is the reason why when we go ahead to profit, that increased almost by 11.5% once again. Now, when we look at the net interest margins also, we saw some bit of an expansion that increased almost by 8 basis points. Street was expecting around 10 basis point of expansion. So, more or less in line with the Street's expectation. And lastly, the AUM growth. Now, that has also remained at around 15.7% in line with the Street's expectation. So, all in all, when we look at the numbers, they are good. Specifically, credit cost, that came in as a surprise because when we talk about gross stage 3 and net stage 3 assets, although we are seeing some uptick in gross stage 3, but the area of concern, which is PV and CE, which was highlighted by few other companies. Now, we do not see any concern in Shriram Finance for these areas specifically because CV and PV both shown some kind of improvement in gross stage 3 assets. And we are seeing some kind of pressure from the construction equipments and MSME segment. So definitely good set of numbers from Shriram Finance. As a result, we are already seeing some uptick in the stock price as well.
Got that. And PSU banks on fire, Gaurav. Up 2% for the day. The PSU banking index is up nearly 5% for the week. And there are multiple factors driving this optimism.
Well, yes, when we look at the PSU bank and overall segment, how they have performed in the quarter so far, we are seeing some kind of good performance from the banks as well. So let's take a few examples. Canara Bank, for example, the latest result that we saw, where we saw loan book growth was at around 14%. Deposit growth was also healthy and higher than their own expectation. And specifically, when we look at profit, most of the PSUs, they have reported healthy growth in profit. So in terms of Canara Bank, they have reported 19% growth on a year-on-year basis. ROA expanded. The same number is what we saw in Bank of Maharashtra as well, where we saw profit increasing almost by 23%. In Indian Overseas Bank, where we saw profit increasing almost by 58% on a year-on-year basis. And specifically, the loan book growth, that was at around 20%. When we look at Bank of India, we saw some kind of uptick in the loan book growth around 14%. Remember, these numbers are in the time when industry is reporting around 11% growth on a year-on-year basis. Lastly, when we look at Union Bank, the latest bank which came up with the numbers, loan book growth was at around 6%. It was a weak number. But apart from numbers, there are other factors as well who are supporting PSU banks. The first is that specifically now SEBI consultation paper, which suggests that there can be some kind of rejig in the index constituents, and as a result, analysts believe that Union Bank, Indian Bank, Yes banks are a likely candidate who can get included in the index, and that is the reason why we saw some uptick in Union Bank. Apart from that, there is some speculation on the PSU merger, specifically in terms of Union Bank and Bank of India, that will make these merged bank the second largest bank of India as per the reports. We also have speculation around increase in the FDI limits from around 20% currently to 49%. So definitely there are some tailwinds which are helping PSU banks. And when we look at valuations also, they are not that expensive. In fact, we have got valuation for a few banks for you guys. Union Bank, that is still trading below 1 time price to book. Bank of India, when we look at Central Bank of India, these banks are actually trading around 1 times. In fact, the PSU bank index, that is also trading around 1.2 times. So definitely on the valuation side also, it looks very attractive. As a result, we are seeing some kind of supportive rally in all of these stocks.
Thank you very much for that, Gaurav. News on your screen, Lenskart IPO fully subscribed on day 1. Retail was the first to get subscribed, but they have only 10% of the overall subscription. And now the total QIB at 1.39 times, but on the whole, fully subscribed. Let's get in Vaibhav Sanghvi, CEO of Ask Hedge Solutions, now joining us. Vaibhav, afternoon. Thanks for joining in. What's the overall market construct and how are you positioned?
Yeah, I think Rima, from a market standpoint, we've rallied quite nicely this month. And my view is basically depending upon the realignment of flows from an FPI perspective, which will of course follow, our earnings growth story, wherein we do think that this quarter the earnings have been better than expected, and hopefully the recovery continues in the next few quarters as well. And if we see continued recovery in terms of the earnings, my sense is that we will see elevated interest from the FPIs, especially when they are underweight India, as a country within the emerging market basket. So if things go, as per what we are expecting, then there is a possibility that the rally, which may happen probably in the next half of this financial year, or probably calendar year of 2026, would be quite sharp and elevated in that sense.
Hi Vaibhav, good to see you, Ben. So you would think most of the bad news is in the price and the markets are bracing for better times?
Yeah, we do think so, purely because if you've seen the last 1 year where because of the weak growth trajectory of the earnings, we've seen consistent FPI outflows. And also because that the AI plays, which is artificial intelligence plays within the region, especially in China, Taiwan, and Korea, kind of attracted a lot of money in that sense. Now, once that kind of gets plateaued, probably it is when our consumption piece, which is has been always been our strength, if it kind of revives and whatever indications we are seeing, I think it's on the path of revival. Then we will see earnings kind of kickstart again, which will lead the global money back into our market. So my sense is yes. To a great extent, we've seen the maximum pain till now. And in an easing environment and in supportive ecosystem from government and the RBI both, we should be looking up.
Vaibhav, what's your view on the banking and the financial names? That's where the big interest is. If you look at the PSU banking stocks, they've got tailwind of their own. There's some point with regard to mergers as well. Foreign money is coming in there, chasing the smaller banks as well. And the larger banks, they look well placed. In fact, we had one of the managements in the morning, Canara Bank. They sounded very, very optimistic. That's a better run bank. Talking about good loan growth, seeing some improvement in NIMs, maybe not to the extent that the street is working with. And ROAs as well will trend to around 1.1%, and they have that gold portfolio. How are you positioned on banks, financial institutions? I recall you had a neutral rating, but that was somewhere in May earlier this year.
Yes, of course. I think we did have a neutral earlier, and especially because we did see good amount of NIM pressure coming about because of the decrease in terms of the bank interest rates. Now that we do see, when we had spoken before the result season, we had mentioned that this quarter probably will bottom out in terms of the NIMs, and then from there onwards we will see some amount of recovery there. Also, the credit growth is something which we are positively surprised, especially on the PSUs. So my sense is basically on an overall banking perspective, we are getting constructive. And from here onwards, we do think that from a business fundamental perspective, we should be looking up again, in the next few quarters. Of course, the pace of recovery may not be extremely sharp, but we do think that this quarter kind of marks the bottoming out, especially on the margin. So we are very constructive here.
Okay, all right. Vaibhav, what do you make of these IPOs? And if you have a comment on Lenskart, what's the visibility according to you?
Nigel, I think not on an individual name for sure, but if you see a broader thesis, right, and over the last couple of years, we've seen that any business model with a technological edge or a capital edge or a product edge is something which is lapped up by the street in some sense. So you will continue to see those kind of elevated interest. Of course, time will tell whether they are being able to deliver in terms of the expected performances. But the only point I would probably make here is that if an investor is getting into a stock or a business model at an elevated valuations, then the gestation period for getting those kind of returns kind of expands in some sense. So one has to be careful in terms of looking at the valuations and investing appropriately. Market definitely gives always good amount of opportunities because of the inherent volatility which is associated with it.
Okay. Vaibhav, thanks very much. We'll let you go on that note, let you enjoy your weekend. Okay, before we toss it to Nigel once again, quick check on the screen, 154 points down. It's that slow grind today. The one thing is that it's not been a buy the dip sort of a session. So that is a little troublesome, but it's all right. It's not too much of a wide fall either. Just talking about the stocks that are leading it on the downside. Eternal's fallen 3.5%. Cipla obviously has been under pressure right from the morning, and NTPC was the other one. Numbers didn't quite hit the mark, so therefore NTPC has been also one of the key losers. Overall, Nifty down 0.6%, Bank Nifty down 0.4% now. But Nigel, F&O, what's happening?
Well, as you said, today is a bit of a sticky trading session where the bulls actually will be a little bit uncomfortable because any kind of dip that was getting bought into, you didn't make any money, and that's the way it's played out today. So let's pull up a few strikes for you on the screen. The 26,000 call should come up for you. Just take a look at that. The 25,900 call. The premium is down by close to around 50% approximately, and the open interest built up is massive. Even if you pull up another strike, the 25,800 call as well, good amount of open interest built up out there. Premium down by close to around 55%. Tell you the call writers, they are back in the game. On the put side as well, there is some build up, added on the 25,800 put or thereabouts. So there's a mix of activity with the premium closer to around 100 rupees or thereabouts. So if you're looking at a level, you don't want this 25,700 mark to get breached on a closing basis for today. So the bulls will have to put in some hard work right now, because otherwise, it'll be a very, very uncomfortable finish to trade to today's trading session. 20 DMA is still 250 points away from around the 25,700 mark. On the upside, the 26,000 level, well, that's a bit of a resistance zone, and we've seen numerous times. You go to that mark, and then in fact, you just see some kind of selling. Stocks are unfocused. We had mentioned earlier today that Sammaan Capital could possibly be the stock of the day because it's coming out of the F&O ban. It could make its way gradually back into the F&O ban, but fresh buying is what we're seeing on Sammaan Capital. Let's pull up the other few names as well that are seeing a fair bit of open interest build up in today's trading session. Union Bank, that's the other one in there where we're seeing some fresh buying. While IDFC First Bank, I think there is a bit of a short covering bounce that's playing out on that particular name. The stock is surged up, and you have the open interest that's down out there. And finally, Polycab, the stock moved quite well. Remember, the promoter came and sold some stake out there. And from there, in fact, you have seen some bit of unwinding of long positions, explained why the stock is down close to around 1.5%. So the market's a little bit under pressure. 25,700 should not get breached on a closing basis. Back to you guys.
Thank you. And on that note, get into a break. On the other side, as always, we'll get you a check on what Dealing Rooms is saying in our segment D Street Chatter, and a few BTST calls from our technical experts.
last 3 days that it's the PSU which is seeing buying interest, and that's really outperforming. Even in today's weak market, that's the space which has outperformed. The PSU bank index is up nearly 2%, and generally there is buying, which I can sense of from a flow perspective into the PSU basket all of this week. Having said that, this week was a bit weak for the markets in general, and that's largely because of the FI selling. For the last 3 days, if you look at the FI data, the FIs are net sellers in the cash market, and they have increased the short positions as well in the futures market. So that's clearly telling on the Nifty and few stocks in the last couple of days. From today's perspective, again, the sense is that the FIs are better sellers. So watch out for the institutional data even in today's market. It might suggest a bit of a down day as far as the FI selling is concerned. Again, but the thing is, after this kind of weakness, normally we've seen, when the PCR hits close to 0.65, 0.6, market sees a bounce back. We are at actually 0.65 level. So I wouldn't rule out a possible short-term pullback purely from a technical perspective next week. So that's something should be watched out for. But the weakness this week is largely on back of FI selling and fresh shorting as well in the futures market.
For now, the Nifty looks like it's going to be testing 25,700. So we're grinding lower and lower. And the Nifty loss tally stands at 160 points now. On the sensex, it's nearly 500 points. Nimesh, what stocks?
Well, so the first stock on my list is Gujarat Fluorochem. It's been buzzing in trade today, but the street is anticipating some corporate development very soon. And that's likely to be a potential further fundraising in their subsidiary business. Remember, I was the first to highlight when they raised 1,000 crores in the subsidiary business. Now, another round of 1,000 to 1,500 crores is something which is quite likely to come. So that's the buzz. As far as Gujarat Fluor is concerned, that's the first name. The second stock is Time Technoplast. Again, it's been consolidating with a positive bias of late. But again, there the sense is that maybe the QIP is around the corner and the company will raise funds by QIP very soon. The third name is AU Small Finance Bank. It's actually outperformed the banking stocks, post the Q2 numbers and some upgrades as well. But there could be a small block in the offering in AU Small Finance Bank very soon. So that's the trigger there. And couple of stocks, whether it's delivery-based selling today, NHPC in the PSU basket, and Nykaa, both stands out in terms of strong delivery-based selling in today's market. So watch out for delivery stats, but largely the sense is there is selling in both those names from larger FIs in today's market.
Okay, all right, got it. Nimesh, thanks very much for that. Well, with that, let's quickly hop across back to Mitesh for some final trades for the day. Mitesh, which stocks?
I think very clearly, we are likely to close below 25,800, which means that there's a good chance that we might actually see 25,600, 550 zones being tested. So a couple of STBT calls. Bajaj Finance is STBT with a stop at 1,050 for targets of 1,025. That looks to be the first level. And the other one, which, when negative positions can be taken, that's STBT on Cipla with a stop at about 1511 or 1512 for targets of 1485.
Okay, all right. Mitesh, just one more stock, Chennai Petro. The stock is now up 10%. The second day running, massive volume, and delivery-based volume as well is quite high on this name for the second day running. What's your view? I think the all-time high is around 1,000 or 1,100 or thereabouts. How is it looking on the charts?
Yeah. Chennai Petro is something, which after big correction, it has kind of recovered, went down all the way to about levels of 400, 410, and then has recovered. I think the medium to long-term trend has turned on the positive, but it's now also heading towards 1,000, 1,010 level, which is where the stock had its weekly closing last time when it peaked down. So I think somebody's having the stock, time to take at least good profits on the table. This week, the stock is up 28%, but in case we start getting past this 1,020 mark, then I think we will see continuation. But as of now, it looks like that looking at the rally, there are high chances of profit happening.
Take some money off the table. That's the call coming in there. Thanks a lot, Mitesh, for giving us that call. Well, next couple of days, we'll be waiting by for the auto sales numbers. Sudarshan joins us to help us out with the preview on that one. Sir?
So auto sales for the month of October will start trickling in from tomorrow, and overall in this festive season, since the time GST rate cut was announced, sales have improved, and majorly both the segments, passenger vehicle and two-wheeler segments, have been seeing growth for the festive season. That is in the range of 20 to 22%. But whole sales growth might be constrained because there was more number of festivals, and because of that, production was shut for these companies. So now, in In two-wheelers, two companies that continue to perform and that have been outperforming for the last few months, those companies are TVS Motor and Eicher Motors, and both these companies are expected to outperform in the month of October as well. TVS is likely to see a growth of 10%. Eicher Motors, that is Royal Enfield, is likely to see a growth of 11%, while Bajaj Auto may see a growth of 4% and Hero Moto may see a growth of 1%. In the four-wheeler space, two companies that are likely to outperform this month are Ashok Leyland and Tata Motors, having CV exposure. For Tata Motors, growth is likely to be of 13%, and for Ashok Leyland, growth may be in the range of 10 to 11%. Maruti Suzuki may see a growth of 4%, while Hyundai's growth might be just 1%. For M&M, auto segment may see a growth of 6%, while tractor may see a growth of 1% or maybe almost flat. So overall, if you talk about the segment, tractor in this festive season is the outperformer, followed by passenger vehicle and two-wheelers.
Thank you, Sudarshan, for that. Get into a break. 10 minutes to go to wrap up the day and the week. More market talk coming up on the other side. Welcome back. We have with us Money Control Super Pro expert Naresh Mirani, a SEBI-registered market professional who tracks the market movements and identifies trade-worthy trends for Super Pro subscribers every single day. Naresh, thank you very much for joining in. Share your quick thoughts on Swiggy, the numbers, and that big fundraising that they're planning to do. How does it position? I mean, now if you have to choose between Eternal and Swiggy, what would the advice be?
So it would still be Eternal, given that the trend has been much more positive for the stock compared to Swiggy. And we need a lot more time for Swiggy to settle up into a consolidation phase. We saw it happen with Eternal also. After the listing, it took almost 12 to 18 months before it started getting into a trend. So I would be still in a preferred mode for Eternal. Closer to 300 could be a good entry point.
Naresh, want to fill us in with an idea?
So stock specific, we are seeing good momentum across the financial space as well as selectively on the mid cap and the small cap space. So today, one stock which has broken out of our list is Latent View Analytics, which has seen a 3x to 5x volume jump as well as a breakout out of the last 3 to 6 month range. So that could be a stock which could head up towards 500, 550 in the short to medium term.
Okay. In terms of numbers, Naresh, which one is a standout performer from the earnings that we've had this week?
So a couple of earnings which came out today. One was Welspun Corp, which came out with a solid earning performance as well as price action post that. And second is Strides Pharma, which is another stock which has been sideways. And now today the earnings were good and the price action is good. Both these stocks look interesting on a dip post the earnings going forward in the next few sessions.
Anything in the tech pack which looks interesting? Now, for instance, Mphasis numbers were fine, but the stock is weak in trade. There are fears of supply, a potential supply coming in from the promoters. That rumor keeps surfacing. But anything in the technology pack other than Latent?
So out there, hardly any stocks are coming up into a strong uptrend. And the sector as such for the last 6 to 12 months has been a relative underperformer. So overall on the tech side, one should be better off avoiding the space unless we see another 15-20% correction in some names.
Oil and gas, the refining stocks. Look at a Chennai Petro, up 12% for the day. Week to date, it's up 28%. This year, it's up 57%. What a move. Even MRPL is up nearly 2%. Not quite the same kind of gains, but oil and gas, especially Chennai Petro. What are the charts telling you?
So strong momentum across the space, whether you look at a Chennai Petro, MRPL, as well as, say, Hindustan Petro. So as of now, in the near term, they're a little overbought because they've moved up 10-15% in the last couple of sessions. But the trend is pretty strong. Some of them are hitting multi-month highs, multi-year highs. So on dips going forward, the top pick would still be Hindustan Petrochemicals, which is one of the leading names in the sector. And on a contrarian theme, could even look at ONGC, which has gone nowhere for the last many years, but has started showing some bit of outperformance and sustaining above that 245 to 255 resistance mark. So it'll be interesting to look at ONGC going forward as well.
Naresh, what about these gold finance companies? Gold had dipped a little bit. Manappuram's numbers weren't very, very good. But if I look at the chart today, suddenly it's seeing some support at lower levels. And even Muthoot Finance, gold came down substantially, but there was some buying that we saw even on the bigger name. The problem is valuations have got a little bit stretched out there. Your view on the gold finances?
So I would expect some bit of a pause in these names. There are only two names as such majorly. And they've had a strong uptrend over the last 6 to 12 months, as well as gold is taking a pause. So overall, looking at it, I would expect a consolidation phase rather than a major correction. So a time-wise consolidation on both these names. So on a longer term basis, it's still a hold, but on the short term, we would expect some consolidation.
And PSU banks, again, that's been the bright spot this week.
So strong moves across the PSU banks, and we still have the largest one yet to make a larger move, that is SBI. That has just touched its previous all-time highs. So at current levels, the best relative choice across PSU banks would be SBI. So at 900 to 950 is a zone where one could keep accumulating on the longer term. This could be a stock which could lead the whole banking pack as well. So I would have a medium-term target price of 1100 to 1200. So SBI would be the top bet in the PSU banking space, and maybe one could take a punt in some of the smaller names like Bank of Maharashtra, which are shaping up for a breakout.
Any other stocks which are on your list for next week, which are interestingly poised, and why you would be watching them?
So would be looking at the whole public sector enterprises as a pack. The CPSE index is on verge of a breakout. The largest weight, BL, came out with numbers today, has given a good move. And we've seen Coal India consolidate, NTPC, Power Grid, all of these names consolidate well. So if we see price action follow up over the next week, that could be an interesting spot. But overall, as a trade, CPSE ETF itself looks interesting. But a lot of these names from this basket could be interesting over for the next 2 weeks.
Thank you, Naresh, for joining in. That was an insightful session for all our viewers who want access to these kind of actionable insights daily. Do check out Money Control Super Pro, where market expertise meets technology. Subscribe now and get an ad-free, data-rich and globally connected experience. And here is a festive bonus. 10 lucky subscribers every day stand a chance to win gold coins. Just scan the QR code on your screen or download Money Control app to know more. Well, 2 minutes to go to wrap up trade. It's been a bit of a disappointing session. Markets extending the slide for the second day in a row. For the day, it's down about a little more than 0.5% on the benchmark indices. The Nifty ending below 25,800, while the sensex is down close to about 450 points. Mid-caps were holding flat, but by the end of it, they closed with a cut again of about 0.4%, and the advanced decline ratio ending in favor of the losing side. While the Nifty ends the week with a cut of about 0.25%, the mid-cap index was up 1%. And the key takeaway is that market seems to be facing some resistance around the 26,000 level. We got there in the early part of the week. We were flirting with those levels. We crossed it, but by the end of it, closing about 250-300 points off the level. For the day, on the way down, Eternal was the top loser as Swiggy expands its war chest. Eternal was down 3.5%. NTPC, Cipla reacting negatively to the second day in a row. Again, US business has been slow, and plus there was a resignation of Umang Bora yesterday. It took the stock down, and it's followed it up with another slide. In the banking pack, Kotak Mahindra Bank and ICICI Bank and HDFC Bank weak in trade. Remember, SEBI has proposed some changes to the way the Nifty banks will be constituted. So there is a possibility that the weightage of these large banks like an HDFC Bank, ICICI Bank comes down, and some of the other smaller banks make their way. Apollo Hospitals, Hindalco, Bajaj Finserv also ending in the red. On the way up, it's BEL that's reacting to numbers. Shriram Finance, also good set of numbers. Stock higher by nearly 1.8%. Keep your eye on all the auto names as they report their auto sales numbers next week. Outside of that, outside of the Nifty gainers, Bandhan Bank was a big drag today. A weak set of numbers. Swiggy ended lower by nearly 2%. On the way up, TD Power, Chennai Petro, PSU banks, IDBI Bank, Union Bank, even other banks like an IDFC First Bank, Canara Bank, Yes Bank, PNB, UCO Bank. The list of gainers, mid-cap banking gainers, was quite large. Well, that brings us to a close on this edition of Closing Bell. Thank you for watching. Don't go anywhere. A very special offering, Editors Roundtable, comes up next.